Hi, everyone. It's great to be with you. Anna Mason from Revolution's Rise the Rest team, joined by one of our phenomenal portfolio company founders, straight from your hometown, Charlie Key of Lausanne. And we're excited to dig in and really just jump into what we hope is just going to be a pretty, I think, authentic, candid conversation that we would perhaps find ourselves having on the phone and, catching up and just exploring various business dynamics and, thinking through the challenges and the opportunities and really, I think, the three-dimensional chess and the complexities of operating and leading a company in these unprecedented times. And then I'd also love to help offer some of the perspective from the investor side of what we're seeing in the market, how we're thinking about opportunities. So it'll really be a back and forth. Do please drop questions into the chat at any point in time. Charlie and I can both see them, and we can move around to make sure we're incorporating those real time. So to kick it off, I'd actually love to turn it over to Charlie to first give us all a little bit of background about Charlie, the man, the myth, the legend. I love seeing the Avenger in the background. You definitely need that mojo and mentality to go out and fight the good fight day in and day out in this environment. So before we actually get into the business and Lausanne, tell us more about yourself.
Yeah, thank you, Anna, and it's a pleasure to be here. This is a great event, and excited to see the workshop side of it this year as well. So, myself, if we go back far enough, I grew up in the Cincinnati area, and I've spent, I guess, most of my life, here in the Midwest. I have an engineering degree by education, and haven't really ever used my electrical and computer engineering degree much in my professional world. So, jumped into the entrepreneur world pretty relatively soon after school, and have been there for the last, I guess, now we're running about 10 plus years. So, it's been a journey. I'm a software guy, so there's a lot of numbers and logic that, when I think about both what we're going to talk about today, but business in general, I try to look at it from an analytical view, and we try to run the company in that way too. And so this has definitely been an interesting time over the last 6 months, and excited to talk more about what we've been doing, and then hopefully try to help people out as we think about this time and what's going on.
Yeah, no, it's great to hear more about your background and how it likely very much so informs the perspective that you bring to bear, both within the operations of the company and just also thinking about the industry and the markets more broadly. From my end, just to share a couple words of background on myself. I am currently based in Washington, D.C., where our investment firm Revolution and our fund, the Rise the Rest Seed Fund, is located. If I had to, sum it up, I'm a recovering bond trader. I built my career, first good tranche of my career on Wall Street as a distressed and high yield bond trader. I'm an eternal optimist, which is, I think, a core reason of why I love the work that we're able to do so much in partnering and supporting so many phenomenal entrepreneurs. And I'm a deep brand evangelist. It's probably what I would put on my business card if I could put anything on my business card, for supporting and partnering in entrepreneurs specifically who are located in cities all across the country. I am the proud mama of two fifth generation crazy little girls, fifth generation Washingtonian little girls. So the other way to look at that is that we're never leaving. I am also the proud partner who helps to oversee and lead what is now about 150 investments in our Rise of the Rest funds across our two funds. So I often say that my kids remind me of startups, and sometimes our startups remind me of kids. And in this age of work from home, live from home, hide in your home, the parental, professional, I think personal continuum has never felt smaller or more collapsed within itself. And so I find myself learning from my kids and so many of our phenomenal startup founders every day. And I'm excited to really spend more time learning from you, Charlie, directly while we dig in. So let's talk about Lausanne, and let's set the stage for everyone on the sort of pre and I can't say post-COVID because we're certainly not post-COVID, but like pre-COVID and COVID world.
Yeah.
What paint the snapshot and the picture for us of the company and what did it look like? What was the footprint of the business before COVID?
Sure, absolutely. So the company is now we're closing in on 5 years old. So we started the company in October of 2015. So that was about a year and a half after selling our last company and had spent some time in the corporate world at a public company. Jumped out, took a little bit, I'd say a little bit, but it was about a month, off in between jumping out of the corporate and starting the company. And so, we've been at it for almost 5 years now. And, running into this year, we, like everybody, we're optimistic about where we're going and what's going on. We had a very good year, to put in some perspective. We've more than doubled every year for the last, the existence of the company, both in revenue and all of our other main metrics. And so we've been on a good run and had a great movement so far. And really, when you think about the company and what we're trying to provide, we're working with large enterprises to provide them with the tools and the product to build IoT solutions and applications. So what's that really mean is, folks like Ingersoll Rand, one of our customers, uses our product to monitor large equipment all over the world, bring that data back and provide it back to their customers, their internal teams to understand what's happening with that equipment, be able to predict if it's going to break down, be able to provide information back to the customer. And then actually they build a revenue generating service around it. And so, that is really what we do day in and day out. And, coming into this year, we're very excited about where it's headed. And honestly, today, we're still very excited about where it's headed. But, you go over the first, I remember it really well because we had just started fundraising, I'd say about December-ish, first few conversations. My first thing is like any capital raise, I assume basically about 6 months. Maybe even a little bit longer depending on what's happening and how things are going and how much leg up you've got on the raise. You have all those early pre-conversations and hopefully you've built some relationships. And so, but I'd say 6 months is a good time frame really to get it done. And that's from conversations to money in the bank type length. And so, we're pretty much very much expecting that kind of timeline, hoping we could maybe squeeze it in a little bit quicker. But so started those conversations, spent the first 2 months traveling, and running around literally the world at that point because, we had a couple of different conferences we were doing. I did, a whirlwind trip in Europe real quick to a couple different countries and try to talk to a couple of our customers and potential investors. Actually one of our investors, who is a board observer, he actually lives in Paris right now. So, stop and catch up with him, trying to make all of the kind of relationship movements, and then came back to the States, went to San Francisco for what I kind of call the, dating table of investors, one of those small events where you go and you do 10, 12 meetings a day, jump in and out of rooms. And so I was really trying to kick off this hard part of the fundraise through a lot of conversations. And basically at that point, we knew things were headed in the wrong direction. We could feel it twice because one, we could see it in the global, both in the global markets from China, but a bunch of our customers are global companies. And so,
So do you feel like you had a little bit of an advanced warning, or were you starting to see some of the writing on the wall early?
Absolutely. So, we're seeing our global customers start to kind of just slow down on the conversation side, start to think about what they were doing for that year's budget and how they were thinking about the future. And so you could see this thing kind of starting to spin. And then so you fast forward 3-4 weeks, and now, basically we went, Losant went to work from home, something like March 16th or 18th or something like that. It was about a week and a half before the state started implementing their lockdown pieces here in Ohio. And so, by that time we had seen more or less everything from everything that was big industrial in our pipeline just kind of slow down to a crawl. Nothing really like popped out.
Right.
No one said they weren't going to do these projects, but you could tell that the sales cycle was going to get much longer. So now I'm in the middle of fundraise. We're seeing some of these things happen, and that's kind of led us up to that point.
Yeah. And to the extent, like, share what you're comfortably, comfortable sharing publicly, but what, give me a couple quick snapshots, like, how many customers, how many employees, how much funding, how much raise, like, where was Losant at?
Yeah. So we come into the year, what do we got? Came into the year about 60 customers. You're talking 20, 30 of those are pretty big companies, Fortune 100 level companies, doing hundreds of thousands of $100,000 plus a year with us, and so, we've got a pretty good roll of customers. It's pretty decent sized business. We came into the year with just over 50 employees. I think we're at roughly 50, 51, something like that. We're at like 57 or 58 now. So we've done a little bit hiring. Now that's been over the last couple of months. So there's a lot of process in between there. But and so about 50 employees. Pretty much everybody's in Cincinnati. We've got a few folks in Chicago now. We've got somebody in California, but mostly everybody's here in Cincinnati, and we run the company out of Cincinnati. Global footprint of customers. We've got customers in it's like 21 countries now. And now every continent except Antarctica. So we're going to have to figure out how to get that covered, but we'll get there.
Okay. So, really, very global, very international, very global business, international customer base, real, you're not like a, startup with 3 people sitting around a desk anymore. You've got, 50 plus people on the team. Can you give context on sort of where you were in the fundraising cycle? Approximately how much capital Losant had raised to date, how much you were looking to raise.
Yep.
You were originally kicking off your process.
Yeah. So when we were kicking off the process, we kind of looked at 2 different sizes of the round. So if you think about where we were in a company size and a revenue, we're looking at a decent size round. You're looking on the low end about a $5 million round. On the upper end, you could push this to a $10 to $15 million round and try to do some concentrated expansion in some of the areas that maybe we could look at it a year from now. So we kind of had two different angles that we were going at it, and had I'd say right before kind of pre-COVID, I'd say we were looking at the larger round. We ended up taking somewhat of the smaller round is what we ended up doing, and I'll say that there's a lot of reasons for that, but and we can go into some of them. But when we think about what we were looking at, it was, and this is how I approach all fundraising is, let's work backwards. What are we trying to accomplish with the money that we're going to raise? Let's not pick a number and then say, here's what we're going to do. Let's pick out what we need to go do and put a number to it. And sometimes that number doesn't work for the VC. Sometimes it doesn't work for us, and you've got to find the right partner where that fits in. But we try to work backwards into this, and so we said there are 2 different ways we can approach this, and there are 2 different levels of outcomes we can go after. Obviously, if you take more capital, you end up typically it's going to be more dilutive. but hopefully you get some different you get some different levers, let's say 12 months from now, that hopefully back into a different valuation. There's a lot of different ways to analyze it. But anyway, so we basically looked at, here's two different areas we could be going after and how we can approach it. And we backed into basically two different numbers. One was roughly about 5 million and one was, say, 10 plus. And so, and there's a lot of other things you can think about in that 10 plus number. You can look at, are there tuck-in acquisitions, which is a very interesting time right now. That'd be a whole nother discussion. But, if you look at the M&A market right now, there's a lot of different ways you can look at capital and fundraising too. Yeah. But so we looked at these two different things. When this was going down, we felt like we were in a really good spot. I was running the numbers. I run my fundraising kind of like a sales process. I have a very distinct funnel that I move investors through. That I try to keep on top of. It goes from ideas, basically firms that I don't know that I think would be interesting fits, connected. So I have an introduction or I know somebody there. It would be basically all I have to do is make an email in order to get to a pitch, and then I pitch them. Then we go to, nowadays, once you're a little bit further in a company, there's a lot of pre-diligence, I'd say, a lot more than I would love, but it's there, and then we get kind of to a committed stage, and then we get to a term sheet if it's a lead, and then we get to kind of post-diligence, post-term sheet diligence, and we get to a close. And so that's kind of how I run my process.
Yeah, and that's great. And that's great too, just to contextualize for everyone. So I really perked up when I heard you say that, because from the investor seat, I actually often coach and encourage a lot of our entrepreneurs and others that I talk to really think about the fundraising process as a sales process, because that's really what it is. You're selling the other, you're selling equity in your business, and you have to find the right fit, and you have to find the right match, and also do your work on your customers and really have that, sort of target investor persona in the same way, that you would for customers. So I really love hearing that, and I think the framework hopefully really helped, kind of steer the ship through this process. So yeah. So we double click. Let's get to the punchline first, for everyone, and then back into it. So you're fundraising. You're in COVID. Smooth process or not?
No. It's been the roughest money I've ever raised in my life.
But happy ending or not?
Yeah, good ending. Yeah, we're in a good spot, and so you can, I'd ask her not to say so much, but you could ask my wife how well it has gone, but. No, it's been tough, and the other thing, and we've almost always done this is, when we go into a process like this, is we have anywhere from like 4 to 6 different kind of options or different plans. I'd say, let's say plan A is everything has gone perfect. We get the valuation we wanted, we get the money we wanted, we get the investors we wanted, and we just keep running. Basically, is plan A. I don't know if I've ever seen plan A actually work, but it happens from time to time, and you'll read about it on TechCrunch or wherever. But, plan B is just a little bit below that. You get good money, okay valuation, good investors. I over-index the quality of the investors and making sure that we have the right amount of capital versus dilution. I'm okay personally, and us as founders, we've been okay giving up a little bit of extra dilution in order to have the right people around the table, because I think that makes a bigger impact in the business versus my ownership level, even today, tomorrow, or hopefully when we have an exit and an outcome. So we over-index on that, and then you get to okay, now we may need to make sure we have capital in the bank. Again, as a venture-backed business, typically we're running with a burn. we are spending more money every month than we are making. That is, but we're spending that money in order to grow at a faster rate than we normally would in like an SMB world. So we have to make sure we put money in the bank. So there's plan C, who are the people that we know we can get money from and put it in the bank? And then you get plan D. What are these other options? How do we make sure that we have capital, whether loans, debt, whatever the other options are? And then the E is like, I'm going to go stand on the side of the street and start, begging people for dollars. But we basically approach it like that. And so we definitely ran past A and in a not so glorious fashion and was in a very good spot and then was in a bad spot. Literally the world fell apart within a matter of like 3 weeks, and literally the investor we were working with at the time, things did not work out, and I don't blame any single party for that. I tend to think that there's blame to be placed all around and completely understand in that market, looking at capital investments and the investment world, it didn't work out. So it was on to kind of plan B/C, but for us, literally the moment we found out that was plan A was not going to work, I was on the phone with people that evening, first our internal team, our investor, our main investor, our board members, and starting to work from plan A to plan B to make sure that we have, the right people around the table in order to execute on that. And so that's kind of how we approach it.
So let me ask you a question about that, Charlie, because so far two of my key takeaways from your story of how things unfolded is one, how you develop your plan around a fundraise and how you structure and think about the engagements, both the types of investors you'll reach out to and then the funnel process that you really have to march them through. And so you're really having a process. So one takeaway is have a process. Second takeaway is even just having that process puts you as the founder in the driver's seat to really be able to run it and either help pull people along or give them the space to opt out. And then the third takeaway, which I think is really powerful, is to have a plan A and have a plan B, because shit happens, as we all know. I hope it's okay to say that on that platform.
Yeah.
So I think there's so as we keep unpacking these great insights, I think two questions come to mind. One actually is a great one that Jared Goldman from our audience dropped in that I want to hit in a second. But my question, just to your point around your board members, is what do you think as a like serial entrepreneur and repeat founder are the most important qualities in a board member? Because they need to be there for you not only in good times but also in difficult, challenging times. So whether people have a formal board or perhaps a group of advisors, or whether they're folks who are joining us today who are interested in taking on that mentorship, advisor, board member role, what do you as a founder value most?
Yeah, that's a great question. I almost think about it as, yes, we have a formal board, but I also have the board of people that I will lean on myself as a founder that, basically have no stake in our company. Hopefully they have a stake in me as a person, but they don't have a stake in the company, and I can ask them different questions. And so as an official board member, first and foremost, it's somebody that I believe that we can have the easy conversations, which are always easy, right? When everything's sunny and blue, it's an easy conversation. But also, even when that's happening, they're going to go, what are we doing wrong? Where are things? What sucks right now? What's going wrong? What's the terrible? How do we think about that? How do we think about the future for that? I look at it. I look at our board and the people around our board as, they're not going to execute day to day. They're not going to be in the day to day. But from a strategic level, and when everything hits the fan, they should be there and at a moment's notice in order to give an honest opinion, to be able to jump up and make sure that we can talk to the right people in order to move the ball down the court in the right direction, and be very transparent and honest with us. And so, I'd say that's the primary. The secondary for us, as we think about building a larger board over time, there's diversity in background, diversity in industry knowledge, diversity in operationals knowledge. And if I think about trying to fill those gaps, as both as me and my co-founders, where are the areas that we need help? Where do we need to think differently? So I try to look at it as, how can I fill some of these knowledge areas, knowledge gaps, and help us think differently from expertise. And so, but first and foremost, it's somebody we've got to be able to have the good and the bad conversations with. Yeah. That, everybody's going to get a little bit emotional and worked up over a lot of these things over time, but we've got to be able to step back, be calm about what's happening, look at it from a logical perspective, and decide what, are the options. I'm a big fan of, let's figure out what are the options that we can do, and then let's think about which ones are the right options. And maybe there's an order of operation on those, but if we take a rash decision, and even if that means taking 2 hours to put some work in to make sure that we know what the options are, that's much better than we've got to do something right this second. Mm-hmm. There's basically nothing that I've ever seen in my company that I've had to make a split-second decision, other than pulling my son away from the pool, right? Like, there's very little that we have to do right in that moment. Now, everybody wants to make quick decisions, but a quick decision is all relative, and we can put thought around that. And so members that can help think through that.
Yeah, so I love that, this idea of, you're always, I think I'm building and sensing this theme of preparedness and process and structure that doesn't, create any sort of like negative space for innovation and entrepreneurship, but actually just is a real complement to it. And so this idea of preparedness, it also pulled through, I think, in the way you explain your fundraising process, but it sounds like it really carries through into, just general operating principles. So let's help some of our, some of the folks who are joining us kind of think through how they can be best prepared for some of their fundraising. Jared asked us, I think this really a poignant question. So I'll just read it out for everyone, though I think people can see it, but why not? Do either of you have any advice for someone raising seed capital in a relatively emerging space? I've heard the phrase, quote, "This looks like an amazing opportunity, but I don't know anything about the space." So I've got a couple thoughts there. Maybe before we get to mine, Charlie, how would you think about helping Jared or other founders like him be best prepared and armed, perhaps even with an option A and an option B of how to handle that?
So our last company was very much in an emerging space, and we got this question a ton. How big is the market? Is it big enough? It's a space that I don't know much about. And so we approached it, we try to approach it in two different directions. One is, you have, I'd say, investors that are more likely to know about the space. You can go find them by looking at past investments, spaces they invest in, what's their expertise at the partner level, the managing director. For us at the time, it was very much about, we were working on a platform as a service in a certain programming space. So who are the people that have that knowledge and therefore are more likely to understand that space versus what I'd say, are VCs who still will invest into that space, but may not have the core expertise in-house. So they're going to typically they're going to use an outside reference or an advisor or somebody to help gain that knowledge or perspective around the space. And in that case, we worked 4 times as hard helping them understand and define that that market in that space versus what I'd say even defining our product and our service. And, there was as much in every pitch at that company around helping them understand the space as they were understanding what we did in the space. Because, first and foremost, I always thought it was, we have to help them understand how we were hitting at this very specific time, we were talking about a $250 million plus market. Like that was the number. We had to help them understand how that space was going to get there. So that's how we approach it.
That's great. And, I think, Jared, to add to, Charlie's suggestions, I would say, I think Charlie really started to pull this thread. There are a lot of different ways to convey information. And people also are different types of learners. And so, for better or worse, perhaps for worse, our industry has, sort of moved to this place where most conversations initiate and many die around the pitch deck, right? And I heard someone refer to it as an adult coloring book on Twitter thread the other day, which really gave me a good laugh. But, think about the different ways you might tell the story, right? You're going to be asked for the pitch deck. It's what we've sort of all been forced into. But I think, a couple other points are, have you thought about developing white papers or articles that also bolster your standing with your target customer base in your space around the values and the benefits of what you're building, why it's new, why it's complicated, who are some of the experts either on your team or you yourself, or perhaps another circle of champions, reference customers that you can bring to bear, less so from a, hey, let me sell you on the company, let me sell you on the product space, and more, let me sell you on the market opportunity, and just to help educate you. I think, and I hope what you'll find is that, so many of us who sit on the investor side of the table are driven by a deep and intense curiosity and passion to discover, to really discover, to understand and unpack, and hopefully, see innovation, kind of before it happens. So I think figuring out how to take a step back from the space of pitching and just kind of shift gears and put your educator hat on would be really helpful. The other flag is that I think one unfortunate byproduct of how transactional a lot of this pitch deck interaction can be in the space is that not everyone is great at saying no, and it is really important, for all parties involved to be okay with the quick no. And it's one of the best ways to maintain the relationship. And so sometimes this looks like an amazing opportunity, but I don't know anything about the space, can mean a couple different things. Option A is, hey, you're actually just talking to the wrong person, or the wrong fund. Option B might be, this person really just means no and can't put it into words. Or you might have an intermediary educational step because maybe you have a generalist investor. We do deep tech investing. I am not a deep tech expert. And I am absolutely sure that I've missed opportunities because I do not understand the fundamental business of what's being built. And I have other other things on my plate, deals and opportunities that I've deemed to be higher priority. And I don't have the headspace to get educated, phone a friend. In other instances, there has been a certain hook that's really captured our imagination about the opportunity where we said, you know what, we really do need to go pencils down. This is going to take us more than an extra minute, but we think it would really be worth our while to come up to speed on the space. So I think my final point here is, how are you also positioning the opportunity, and are you kind of, selling the sizzle to a certain extent to have people create the time and the space to learn? So I see we've got a couple other questions coming in here.
Great convo. I'll go ahead and relay this question from Eric in the chat. And if our fellow attendees would like to drop their questions in there now. We can address those. So Eric says, can you talk for a second about the importance of local dollars, or is that just not a was when VCs wanted to be within driving distance of their investments? Will that change post-COVID? How much of a strike against you is it that you can't raise money in your own area code?
Great question. Thank you, Eric. Charlie, if you have any hot button thoughts, I'll give it to you from the founder perspective, and then I'm going to share my investor perspective.
Yeah. There's a bit to unpack here. So, as all answers in business, it depends. But for me, local dollars have been important because it means that I can have an in-person conversation most of the time, maybe masked on right now, but I think that just the human interaction part of the local dollars is very nice. I don't think it's required. I think there's a lot of reasons somebody in Cincinnati might not invest in a company that is investable. Hopefully we have more investable companies than we have investment dollars in Cincinnati to throw around it, depending on the stage of the company. Again, there's a lot of factors that run into this. From my experience, and this is just from my experience, the driving distance thing matters very much more in earlier companies versus later stage companies. I know a lot of investment firms on both coasts, even in the Midwest, that would love to be within a driving distance of a very early investment. So let's say a seed or a post or a little bit after a seed. They'd very much like that to be in their backyard, but it's getting to be less so, even more in the last few years, I think. And so, certainly, I not to say that the West Coast is very much about this, but it has been more in my experience that a West Coast firm is more about the driving distance, especially early stage. Again, we're talking fairly early stage. I think once you've got, I'd say post product market fit, it gets a bit easier to get these people involved into outside of their backyard. Again, it goes back to their investment thesis and a lot of other things from my experience. And so, that's, as far as a strike against you, I can't really say, from what I've seen. So I'll leave that to Anna.
Yeah. So, no, it's a great perspective, Charlie. And I particularly appreciated the nuance of early versus later stage. I've actually seen that dynamic play out from conversations with other investors. I think there are increasingly, and this is a great thing, more what I would call like regional or state-based index funds, or they're not officially index funds, but they refer to themselves as being index. Right. We're not quite enough of an asset class yet for venture to have index funds, but there are funds and it's emerging and thriving tech hubs all across the country that have the 25, 50, $100 million funds that basically say, if you're looking at a deal in our city, you should call us because we probably know about it. If we don't know about it, it's a problem, but we can get, we can do our work really quickly. So there was a measure of, head scratching maybe if a local fund isn't investing in its hometown heroes. I think some of the nuances around this are, something I've come to discover in our industry is that sometimes familiarity breeds skepticism. And, I see a lot of, hyper local or rather regionally based smaller early stage funds. I really largely speak from the experience in the seat of early stage, and they'll be, I won't call out any cities, but like they will literally do deals 2 or 3 cities over and will consistently pass over deals in their own backyard in their own community. And I don't know if that's something to the sort of mystique and magic of entrepreneurship and innovation, that when the people in your own backyard, it's something I have noticed is a bit pervasive across across communities. I think the good news there is that over the last couple of years, there has been a proliferation and an expansion of more geographically diverse early stage funds. So the good news is like there's more going around the pot locally and regionally. But when I think about, so the way Eric, I think I would maybe most directly answer the question is that, you know, there has been a lot of research and work put forward over the last number of years about the value in high growth tech startups and venture backed startups is that they are a jobs multiplier. And so they're not just creating any X number of jobs within the company, but then I forget, you know, I think it's somewhere between 4 and 7 jobs, depending on, you know, the region and all that, in terms of other jobs that get created. And so I would draw the comparison to venture capital and your investment dollars, that whether or not it's a hyper local fund who's down the street from you or another fund that's across the country from you, you want to target funds and investment partners who can be capital multipliers for you. Because we all talk about you know, can you raise the money? But to a certain extent, the money is linear, is spent linearly unless you know how to juice it and drive exponential returns. And so much of that comes through non-monetary capital. How are you building out your education, your resources, your connections, your biz dev, your other investors that they could bring to bear. So when you're sitting there as an early stage investor, or you know, or as an early stage founder, or an investor considering where to place your bets, I think thinking through the different ways that like, what does catalytic capital mean to you? What are some of the key drivers of what you need? And to Charlie's point, at the early stages, sometimes you really need buy-in from your local community. And so having that local investor is really important to open doors, quite literally, in your backyard. As you get bigger and you grow, you might find that catalytic capital takes a different arc and means something different for your business then. So you might need that coastal investor who actually has more experience in some instances taking the company to an M&A and a successful liquidity event. And so I think it's stage dependent, but I would frame it in terms of how can the capital that you're giving or getting, that you're investing or getting, be most catalytic and exponentially spent. So I think that'll take us pretty much up to the buzzer. Charlie, just as Catherine's coming back on to send us off, any final words, perhaps Avengers inspired, for folks on the call in terms of how to navigate these trying times?
I was just going to throw out a couple little last tidbits. I had them in my notes. You know, I was going to say, you know, when I think about specifically fundraising in COVID, I think my funnel had about 75 different investors in it. You know, I talked to probably all of them over a course of about 3 weeks out of the gate. So, you know, we're taking the work week, you know, 5 a day for 5 days for 3 weeks. You know, that was kind of the numbers that I'm seeing. Probably in the next round too is probably 75, between 75 and 100 is probably my target size. Some of the ones that were in my last one won't be in my new one because they're outside of the stage and a bunch of other things. I love getting them to a no. You know, one of the things I like to do is tell them why they should say no. Basically, here are the reasons that we may not fit into your fund, and have them tell me why we would, or take it as an okay and let's move on. Quick no and a long no. And then kind of the last thing is, especially in the COVID space, you know, I've found it, and I think this is just responsible, but being very transparent and straightforward about, one, how is this impacting the business today? How do we think it's going to impact the business tomorrow? And how do we think it's going to impact our industry in the macro space? So, you know, those have kind of been my big things, especially not only with potential investors, but with our investors today and anybody we talk to, is what's happening today? How is it going to affect us? How do we think it's going to either have a headwind somewhere or a tailwind? So think about that in your business. Is this going to give you a tailwind somewhere, or is it going to put a headwind against you in some part of the business? So that's my last couple kind of tidbits.
Thank you so much. Thanks again, Anna and Charlie, for an amazing and bits of advice for our community here.